It has to be our capacity for not building, if that is a key driver of not doing something. I think our figures for 2014 were, we built 115,000 homes in the UK. Our requirement is 240,000. We need 50,000 homes in London each and every year, and that's the same size as Oxford. Last year we built 20,000 homes. So our capacity for actually reaching what we really need to build is very poor. So that's the first one. The second one is private rented, and I think across all of Europe, and I look to Marcus to corroborate this, is private rented in the UK is the only growing tenure type. And so when you look at it across a European sector, private rented is almost doubled in the last 10 years within the UK. So we've gone from nearly 2 to 4 million households, and we can't build the homes that we need. So we've got a significant shortfall, and it's being compounded. I think that whilst we're getting into the the who can build the most homes game debate between the various different political parties at the moment in the run-up to the election, I think that the latest number I've heard is that Labour would like to build 200,000 homes per year by the year 2020. Okay, so that's 40,000 homes short every year between now and then. So that's still 200,000 homes short. So we've got a massive shortfall. We've got immigration. We've got increased births over deaths. We've got an increased household formation. So not only are people living longer, we've got more births. People are living in smaller units. So the family home is breaking down. So we've got an increased number of homes that are actually required. The combination of all of those, together with prices that have continued to move up, means that people are likely to have to rent for longer, because they can't afford to get onto the ladder. If you're then worried about the stability of the market, and to say, well, actually, that's very easy because you just recalibrate market pricing. 48% of UK homes that are owned with no mortgage. So there's a huge amount of equity within the existing market. As a result of that, we believe capital values will stay relatively stable. And again, reference to Marcus's comments on you seeing the volatility in house prices. I hope, from Jane's perspective, all of you were very clear to see our big sign as you come out of the lift saying we're income-driven investors. Well, hopefully that isn't lost. Residential, we see, because of the fundamentals that I've just outlined, we see there being significant rental growth going forwards in the private rented sector. So the models we look at aren't forecasting house price growth, they're looking at rental growth for all the reasons I've said. So we focus on 25 to 34-year-olds, mainly because they're most likely to rent, they need flexibility, and also they have the highest level of wage growth. So sorry to those of you who aren't under 34 in the room, you're unlikely statistically to have a higher level of wage growth than someone who is under 34. So from that target point of view, we think there can be significant wage growth, and as a result, rental growth could be sustainable for people within the PLC.